There doesn't seem to be a point where we see a bottom for the Turkish lira at the moment. What would need to happen, in particular, policy or the central bank stepping in, or some sort of détente between these US-Turkish relations that you think could stem the bleeding?
Well, I think you're right that it's very difficult to pinpoint to a specific level that will indicate the bottom for the Turkish lira. Because if you're thinking about levels, you're essentially inferring that markets are concerned about valuation, and at some point valuations are going to be attractive. But the fact is that valuations are already attractive. So it's really a question of at what point do we see a coordinated policy response from the authorities. And it doesn't have to be only monetary policy. I think it has to be a combination of monetary policy, fiscal policy, and also foreign policy. So first of all, you need to see substantial rate hikes by the central bank. You also need to see a commitment from the government itself that it will be cutting spending. And at the same time, you need to see signs of improving relationship with the US. Till the time we don't see some sort of coordinated policy action from the authorities, it's very difficult for Lira to find a floor yet.
I just want to take a look at the correlation that we've seen, or I suppose the trend of the euro also tracking the decline in the lira lower. This is in our GTV library. The contagion risk, right? I mean, I think by and large, most people say the contagion or the spillover effect is going to be fairly contained to Turkey. Who are going to be, I suppose, the most vulnerable culprits in the FX space?
Well, I think, again, you're right. I think, I mean, the way markets are looking at euro at this point, it's very much a function of what's happening elsewhere, what's happening with the US dollar, what's happening with CNY, and what's happening with Turkey. There are not a lot of euro-specific factors at play at this point of time. Again, I think there's been a lot of focus from market participants as to how much do European banks hold Turkish assets, and that has definitely contributed to the recent decline in euro that we have seen in the last couple of days. I think broadly from an FX market point of view, you would typically expect some of the more high-yielding FX in emerging markets to face the most brunt of Turkish lira weakness. So spillover is going to be felt the most amongst the high yielders in EMFX.
David, actually, I think the biggest problem is going to be for these corporates who are leveraged up in dollars and other currencies within Turkey, and that can be the real danger looking ahead, as they could default and indeed go bankrupt, and that could cause seismic shifts in particularly the Balkans.
Absolutely. I think that's exactly what market participants are worried about at this point of time. We've already seen almost 44% decline in Turkish lira this year itself. Clearly, as a result of that, all the unhedged foreign currency borrowing by corporates onshore has increased quite substantially, and especially for corporates which do not have a matching foreign currency asset in place. Clearly, markets are very worried about that at this point of time, and I would probably argue that large part of the weakness that we have seen in lira over the last few weeks has been a result of markets starting to price in that risk, that what happens if we start to see systemic defaults happening onshore with onshore corporates.